I'm Peter Gelman of Palmerston Group Advisors. People who have IRAs always have had the option of converting part or all of the traditional IRA to a Roth IRA. Anytime a conversion is made, ordinary income taxes are due as if a distribution from the IRA had occurred. Whether to do or not to do a Roth depends on a variety of factors. These factors include things like whether you have the cash available to pay the taxes without touching the dollars being converted to the Roth, whether a conversion is pushing you into a higher tax bracket, whether you'll need the converted funds in the next 5 years since Roth conversions prevent withdrawals for a 5-year period, whether you have a long-term horizon, a time horizon, and see some tremendous investment opportunities, since the Roth conversion would mean that all gains would be free of both income taxes and capital gains taxes, whether you expect to be in a higher or lower tax bracket during retirement, whether you expect to be able to live without the money in the Roth IRA and instead adopt an estate planning purpose or focus for that Roth and plan to leave that money to beneficiaries who wouldn't need to pay taxes on distributions from a Roth account. All these factors, as well as many others, help determine whether a Roth conversion is a relatively good or relatively bad choice. The Secure Act, passed in 2019 by Congress, changed a lot of retirement rules. One of the most significant changes is that almost all non-spouse beneficiaries must now withdraw funds from the IRA within 10 years of the death of the account owner. That's a big change affecting whether Roth conversions make sense. The Secure Act eliminates the stretch IRA, a technique which has been used to extend the IRA through the life of the beneficiary, which theoretically could stretch the withdrawals for another 40 or 50 years. Congress, I believe, saw the Secure Act as a way to squeeze revenue out of higher earning taxpayers. Many beneficiaries will inherit IRAs in middle age at the peak of their earnings and therefore at the peak of their taxable earnings. Congress clearly hoped that the 10-year requirement would push lots of people into higher tax brackets. The existence of the stretch IRA was often a strong argument against doing a Roth conversion. Paying taxes up front is rarely the best choice, and Roth conversions require taxes to be paid the year the conversion is made. The ability of a beneficiary to receive periodic distributions over a lifetime, as in the stretch IRA, was a pretty strong argument for standing pat and not doing a Roth conversion. All these calculations have changed because of the Secure Act. The traditional IRA, especially when it's a big IRA, has become a poor vehicle for wealth transfer and estate planning. On the margin, Roth conversions have become more attractive. A beneficiary of a Roth is subject to the same 10-year rule, but there are no taxes. So even compared to the traditional stretch IRA, the inherited funds can be invested completely tax-free during those 10 years and then withdrawn tax-free at the very end of the 10-year period. Inheriting a Roth IRA is potentially inheriting a great nest egg. Another thing to keep in mind is the political environment. There are strong forces pressing for tax rate increases. That pressure shows no signs of disappearing anytime soon. One can't assume so easily that tax rates during retirement will be a lot lower than those paid during working years. So paying taxes now and permanently putting the funds in the converted Roth beyond the reach of future taxation is relatively more attractive now that the Secure Act has become law. The Roth can therefore, become a resource for later stages of retirement because it eliminates the required distributions. The Roth can also have time to accumulate and can be withdrawn or not at will. And when there are withdrawals, again, they're tax-free. Finally, with the Roth being a relatively more attractive option, combining a Roth with charitable strategies may amplify the benefits of a conversion even more. So as you consider retirement planning, retirement income, and estate planning, keep in mind that the Secure Act has altered the relative balancing of doing Roth IRA conversions. Thanks for watching.